Hello everyone, I think we can start. Welcome to the IMF's Middle East and Central Asia Regional Economic Outlook. My name is Aynuri Mangali. I'm journalist and TV presenter at Жібек Жолы TV channel, and today I'll be moderating this session. Today we will be discussing key points and messages of regional economic outlook in the context of safeguarding macroeconomic stability amidst continued uncertainty in the Caucasus and Central Asia. 2022, according to IMF's outlook, was good in general for CCA countries. Inflation remained elevated and there was a strong response from the central banks to inflationary pressures. What is expected for 2023, just in a few minutes, we will discuss a little bit in more details. First, let me introduce our speakers. Today we have Mr. Subir Lal, Deputy Director of Middle East and Central Asia Department at the IMF. He will make a brief presentation on the regional economic outlook just in a couple of minutes. Our next panelist is Mr. Akaljan Baymagambetov, Deputy Governor of National Bank of Kazakhstan. And let me also introduce our speakers who are joining us online. Mr. Armen Nurbekyan, Deputy Governor of Central Bank of Armenia, and Mr. Johannes Alin, non-resident senior fellow of the Brookings Institution. I also welcome our audience here at the premises of National Bank of Kazakhstan in Astana, and the audience who is joining us online. A little reminder, the event is being live streamed on IMF website and also social media channels of National Bank of Kazakhstan. Now, let me give a floor to Mr. Lal with a presentation of the regional economic outlook. Q&A session will follow. Please go ahead.
Thank you very much, Ainur. Good afternoon to all of you here, and good morning to those of you dialing in from Washington and elsewhere. It's a real pleasure to be here. Thank you, Deputy Governor, for hosting us. And I'm also glad that Johannes and Armen are able to join us online. I'll make a very brief presentation. Our report was the half-yearly Regional Economic Outlook was just recently published, so I would also encourage you to take a look at the published report after today's event. So let me start briefly by recapping some of the developments that Ainur just now mentioned. So I will refer to the Caucasus and Central Asia as the CCA, and we group these countries together in our analysis. And so the CCA economies last year grew at 4.8%, but with a wide variation in growth, with Armenia at over 12% and with Turkmenistan closer to 2% by our estimates. This higher than expected growth reflected a smaller than expected contraction in Russia, which is the main trading partner for most countries of the region. And in addition, significantly increased regional trade, higher oil prices for oil exporting countries, a surge in money transfer inflows, including due to immigration from Russia in oil importing countries, but also strong wage growth in a number of countries, including Armenia, Georgia, the Kyrgyz Republic, and Uzbekistan. You can see these numbers on the left-hand side chart in front of you. At the same time, as you can see from the right-hand side, current account balances in 2022 significantly improved across most countries in the region, reflecting mainly positive trade balances for oil exporters, Azerbaijan and Kazakhstan in particular, and higher income transfers and services surpluses in most oil importers, and in particular in the low-income countries of the CCA region. At the same time, inflation was elevated last year, and it seems to have peaked in most countries at a high level and started coming down in a few. Headline inflation reached double digits in most CCA countries last year, and the easing of food and energy prices has helped bring inflation down since the beginning of this year in a number of countries. You can see that on the left-hand side chart. On the right-hand side chart, we try to break down a few of the factors that led to this large increase in inflation in 2022. In addition to the global food and energy prices that I mentioned, inflation was partly driven by the depreciation of national currencies, leading to imported inflation, strong nominal wage growth, which, as you can see from the chart, was surpassing inflation in all of the CCA countries. And thirdly, strong credit growth, which was also in excess of inflation in some CCA countries, such as Kazakhstan, Azerbaijan, and Uzbekistan. Central banks have raised policy interest rates substantially over the past 2 years, and in fact, central banks in the region in many cases were ahead of others in tightening monetary policy in response to what they saw as rising inflation. Responding to the demand and depreciation pressures, all central banks, except Uzbekistan, raised their policy rates. Among the floating exchange rate countries, which includes Armenia, Georgia, and Kazakhstan, since January 2021, Kazakhstan has raised its policy rate the most by 775 basis points. The Kyrgyz Republic, with a managed exchange rate, raised its policy rate by 800 basis points, while Azerbaijan, which has a fixed exchange rate vis-a-vis the US dollar, has raised it by 250 basis points. Broadly in line with the Federal Reserve, and Tajikistan raised it by only 25 basis points in response to the inflation dynamics in that country. We did some estimates of the stance of monetary policy by calculating what is known as the natural interest rate for the economies in the region. And very briefly, on the right-hand side chart, what you can see is that policy rates in most countries in the region were at or above what would be called the neutral rates, so which are our estimates of the interest rate that is consistent with stable growth and inflation. In other words, the monetary policy stance was appropriately tight or neutral in many countries at the beginning of this year. Turning to financial conditions, overall domestic financial conditions for countries in the region have tightened. This monetary tightening that I just now referred to has led to tighter financial conditions in the region. While financial conditions in advanced economies appear to have eased in recent months slightly, they remain tight in the CCA region. The first chart, which shows a financial conditions index, which has a variety of financial indicators such as debt, equity, and other external factors, has increased considerably in the region, primarily because of interest rates, as you can see in the chart. In the middle chart, you can see that since the collapse in the United States of the Silicon Valley Bank, most currencies have remained stable. So that fairly sizable disruption in the financial sector appears to have had little impact here in the CCA region. And this is partly due to the limited exposure of the region to US and European banks. And most currencies have remained broadly stable or even appreciated. The Kazakh Tenge has experienced the largest volatility, but after initial depreciation following the SVB collapse, it has recovered. And on the third chart, you can see that sovereign spreads have edged up. And even though they remain below the peaks reached in the wake of the war in Ukraine, suggesting that markets are pricing in some heightened uncertainty. Turning to fiscal policy, the stance has been restrictive in most countries last year. Primary fiscal balances improved in most countries in the region, and public debt declined, and in some cases it declined quite substantially. The reduction in public debt, however, was partly due to the strong nominal GDP growth, including because of inflation, while exchange rates rebounded from initial depreciation after the onset of the war. Let me now turn briefly to the outlook, the risks, and the policy priorities. We project growth in the CCA region to moderate from an average of 4.8% in 2022 to 4.2% in 2023, before picking up slightly to 4.5% next year in 2024. This reflects the combined impact of the ongoing monetary tightening and expected slowdown in migrant and income inflows from Russia to oil importing countries relative to last year, lower remittances to the low-income countries in the region, and a slowdown in gold and agriculture production. On the other hand, in Kazakhstan, growth is expected to accelerate to 4.3% from 3.2% last year, as oil production normalizes and the expanded Tengis field becomes operational. In chart 2, on the right-hand side, you can see that inflation is expected to decline, but perhaps a little slower than was expected before. It's expected to ease gradually from 13% last year to 11.8% this year and 8.5% next year. But this is an average, and the pace of disinflation will vary by countries. It should decline more strongly in emerging market countries in the region in this year and next year to 6.4% in 2023 and 4% in 2024. And it was much higher at 10.5% last year, so that's quite a steep decline. And this reflects the easing of commodity prices and the lagged impact of monetary tightening and appreciation, which is feeding through now to lower inflation. Disinflation is expected to be slower in some of the low-income countries and oil exporting countries due to demand pressures, including from real wage growth. In low-income countries in the region, headline inflation will remain elevated at 11% in 2023, before declining to 9.3% in 2024, while in oil exporters, inflation will decline from 14.3% last year to 13% this year and 8.7% next year. So that's the broad trajectory that is visible in the chart there. Turning briefly to risks. The balance of risk is skewed to the downside. And the key downside risks include some factors on the external front and some domestically. On the external front, global financial turbulence and tighter for longer global financial conditions could depress growth in the region's trading partners and therefore demand for the region's exporters, including for oil. It could also increase volatility in financial markets and therefore borrowing costs. The war in Ukraine and a new wave of or tighter sanctions are also another downside risk that could lead to volatility in commodity markets, shortages, and renewed price pressures for energy, food, and fertilizers, which we saw a bit of last year, and adding to inflation pressures and exacerbating food insecurity in low-income countries. A sharper contraction in Russia, a bad harvest, a reversal in foreign exchange inflows, or any disruptions in the CPC pipeline and regional supply chains could also hamper economic activity as a downside risk. Geopolitical tensions and sanctions could also undermine international cooperation and constrain cross-border payments and flows of labor and capital, and disrupt supply chains. Turning to domestic risks, more entrenched inflation expectations are a risk because renewed commodity price pressures and supply chain disruptions could keep inflation elevated longer than we expect, leading to exchange rate and wage pressures and de-anchoring of inflation expectations, which in turn could entail additional monetary tightening and a further growth slowdown and financial tightening. A longer-term risk, of course, is climate change-related risks to the region. Changing weather patterns and more frequent weather calamities could hamper agricultural output, which is important in many economies in the region, and overall activity, worsen food security and poverty, especially in the low-income and fragile states. And the limited fiscal space and dependence on food and energy imports will continue to be a key vulnerability. Any combination of shocks that renews food security concerns, including high inflation, could also provoke social tensions and weigh further on growth. So one key takeaway that we have from this configuration of events is that the changing trade patterns in the region are an opportunity, but also a risk. Countries need to strengthen their resilience. So the sanctions against Russia have led to new trade patterns, but also increased the region's trade with Russia, especially for oil importing countries. This dislocation of traditional trade routes is an opportunity for the region to diversify trade within and outside the region. On the other hand, the increased trade ties with Russia exposes the region to a heightened risk in case the sanctions are deepened and the Russian economy contracts more sharply. In addition, growing non-resident deposits in the banking system can pose financial stability risks. Large transfers into domestic banking systems requires close monitoring to mitigate these risks. And non-resident deposits have increased by 4 to 8 percentage points of GDP in Armenia, Georgia, and Uzbekistan, reaching 6 to 18% of GDP altogether. While some banks in the region have built liquidity buffers, a possible reversal of non-resident deposit inflows could be a significant risk to financial sector stability. Finally, turning to policy recommendations. The need for countries in the region, especially in light of the experience over the last year and or so, is to further boost resilience and to mitigate some of the risks that the region faces. Containing inflation is a priority to sustain macroeconomic stability and alleviate the impact on households and businesses. Despite the emerging signs of disinflation, it remains elevated and should be reduced. Inflation remains elevated. More tightening in advanced economies could lead to additional depreciation in the region and therefore on price pressures. In this context, monetary policy should be cautiously calibrated. In countries where demand pressures and high inflation persist, the authorities should consider further monetary tightening as appropriate. Where inflation has peaked, central banks should carefully monitor demand pressures and consider gradual easing once disinflation trends are firmly established. Preserving financial stability is also a key policy recommendation. Central banks should closely monitor and address financial stability risks, including in view of tighter financial conditions. Crisis management and bank resolution frameworks need to be strengthened, and central banks should be prepared to provide targeted liquidity support to solvent banks subject to temporary funding pressures should these arise. Rebuilding fiscal buffers would require maintaining a tight fiscal stance while protecting the vulnerable. Oil exporters should carefully manage oil windfalls, and avoid expanding public current expenditure and improve budget transparency. Early action is needed to support economic diversification and address the challenges related to climate change and green transition. In oil importers, the priority is to continue rebuilding fiscal buffers and strengthen resilience to future shocks, including from a possible sudden reversal of inflow of income and labor and a sharp decline in remittances. Finally, structural policies should aim at maximizing potential growth and bolster inclusion. In view of the heightened uncertainty, accelerating structural reforms has become even more urgent. to strengthen resilience and support a sustainable and inclusive recovery. To this end, private sector development needs to be supported by reducing barriers to growth and redefining the role of the state in the economy. The key reform priorities in general for the region include governance, state-owned enterprises, labor and product market regulations, access to finance, and human capital development. In addition, trade liberalization and diversification in both products and destinations will be particularly important given the heightened risk of geopolitical fragmentation. This includes removal of distortive trade barriers and proactive efforts to encourage export diversification. Early efforts are also needed to address the growing risk of climate change while ensuring energy and water security. Having a small overall carbon footprint, the priority for the region is adaptation to climate change. Oil exporters, however, are also facing significant transition risks, addressing which will require concerted efforts to diversify and reduce dependence on fossil fuels. Let me briefly also draw your attention to some of the work that we have been doing on economies in the Caucasus and Central Asia region, including, of course, the Regional Economic Outlook, which has just been released and which I would invite you to take a closer look at from the IMF website. In addition, we did 2 papers related to financial sector risks and financial stability in the region. And next month, we have 3 other papers that may be of broader interest, including one on paving the way to more resilient, inclusive, and greener economies in the region, another paper on strengthening monetary policy frameworks in the Caucasus and Central Asia, and finally, fiscal challenges facing the region. With that, let me conclude. Thank you very much for your attention.
Thank you very much, Mr. Lal, for sharing with us the key messages and points of the Regional Economic Outlook on this region. Let me start the conversation with our panelists. Inflation was and is remaining a big topic in this region amid other challenges, as well as geopolitical risks. Mr. Sabir Lal, in your April 2022 report, spillovers of the war in Ukraine were perceived to be strongly negative. Looking back 1 year on, spillovers have in fact turned out broadly positive. So what are some key factors that can explain what we have seen so far, and what, again, are the key risks to this outlook in the nearest perspective for this year and beyond?
Thank you very much, Ainur. That's a good question. Indeed, our initial assumptions at the start of the war was that the region would be mostly negatively impacted. At that time, it was not clear how deep the negative spillovers from Russia would go into the region, and how that would impact remittances and other financial flows. We quickly, by looking at the first few months of data, by the summer came to the conclusion that in fact the developments ended up having a positive short-term impact on the region, because remittances actually went a lot higher than expected instead of declining. And part of it could be a portfolio shift of workers moving large segments of their wealth out of Russia into the region. And in addition, trade and intermediary trade going through countries in the region picked up enormously as the sanctions were put in, and many of there was some transshipment through other countries. So that also was much higher than we had anticipated. And also the movement of many Russian immigrants to countries added to domestic demand in the countries now, and to employment and growth in those receiving countries, the countries that hosted them. That being said, we are already seeing from the trends of this year that some of these big one-off positive factors are beginning to recede. And that's why our outlook for the region is more geared towards a slowdown in overall growth in the CCA region, for instance, from 4.8% last year to 4.2% this year, reflecting this sort of normalization of some of these extraordinary positive influences.
So these trends are not stable.
Indeed, they are not stable, and we have to be very careful when we make projections that there's a large band of uncertainty around these, but this is our baseline for the region.
Thank you very much. Yes, indeed, the CCA economies have displayed varied experiences with inflation. We all have witnessed it. So the question to Mr. Akılcan Baymagambetov, while inflation appears to have peaked in some, it is still persistent in others. What have been some of the key factors contributing to inflation differentials in the region, and what role do domestic demand and imported inflation play, in your point of view?
Thank you, Ainur, for the question. It's really very good and interesting question. It's always some discussions about what is the role of some domestic or internal factors, external factors. I should say that import, in any case, play very significant role in our life, in our consumption. Really, I believe it's more or less common for the region, but in case of Kazakhstan, we don't produce what we wear or use in everyday life, and especially, for example, in terms of Kazakhstan, non-food products, it's mostly imported from other countries, and in terms of, for example, food, we more or less have some food security on our side and produce most part of the consumption basket, but the price is also linked to the global, and that's why the high food price, high global food prices, it's also translated into our economy. And for example, very good example, it's from the past year, it's sugar. When Russia banned sugar in the spring last year, we will see it's not banned only for outside of custom union, but also inside of custom union, and we see some spike in sugar prices in Kazakhstan. It's example of the food prices, not only non-food prices. One big part of the story, it's about the supply chain. We see that yes, during the pandemic, supply chains was breaked around over the world. Now, when we discuss about the global situation, it's more or less better in terms of supply chain restoration, but in terms of the region and Kazakhstan in particular, we have a very big border with Russia, and due to this sanction and due to that, Russia was like a hub to import a lot of number of different non-food goods, food goods also, but when we say about the Western produced goods, now we see the again broken supply chains for that, and it's also have an influence to the prices, to the inflation. It's more about maybe some import inflation and external factors. Now we see a little bit easing on the food price, global food prices, etc. What about the internal? Maybe some differential of Kazakhstan in compare with the other countries of the region. It's about our fiscal support to the economy during the pandemic. Maybe we have a quite excessive package of the fiscal support to the economy. We see that oil fund, our national oil fund, still in so-called consumption mode. We don't save money in national oil fund. It was starting from the pandemic or earlier, and we still have a very large amount of the transfers from the oil fund to the Republican budget, and the whole fiscal support, it's also create and support the demand in the economy, and some part of the support, it's unfortunately not produce some GDP, but produce more higher prices, and it's also it's like some part of the differential and reason for more high inflation in Kazakhstan in compared with the other country of the region.
Thank you very much, Akaljan Baymagambetov. I will proceed with asking questions to our speakers who are joining us online today. So the inflow of capital and migrants has been substantial for small economies in the region relative to their size. Armenia has recorded a growth level of 12.6% in 2022, in large part due to these inflows. Mr. Armen Nurbekan, in your point of view, what have been the specific channels through which these inflows have affected the economy, including the financial sector, property and labor markets? And again, what opportunities and challenges these trends raise? Thank you very much.
Nur, thanks very much for the question. I hope you can hear me well.
Yes.
First of all, thanks for inviting me to this esteemed panel. And I enjoyed the presentation earlier very much. So you're absolutely correct that we need to understand what are the key factors driving our economic growth. And the key channels, I think there are three of those. Number one is, of course, if you look at the types of capital flows, there is a significant increase in non-resident deposits into our banking system, as Subir, I think, showed quite a bit is the case for the other countries as well. And these are mostly retail deposits because our banking system didn't have big flows in terms of the large wholesale deposits. Now the banks, given the size of the increase, because we are talking about the 60–70% increase of the deposit base from non-residents, of course, didn't lend this out. And they have been very, very careful in terms of managing this risk related to these flows. And most of these funds have been actually parked in liquid assets abroad. That's number one. This is important, of course, but it isn't a big driver of the growth, given its very limited connection to the actual real economy. The second part, which is a more important part, is of course the demand side, and this is indeed a key driver for the economic growth, is the very large increase of international visitors to Armenia. So if you look at the both tourism numbers, we are now at the pre-COVID levels. If you look at the services sector consumption, we have a very big increase driven by the international visitors. So this was a key factor. If you look at the gross flows, this was absolutely a very big contributor. So this was one. Now, from the supply side, the potential contributors to the potential of the economy, so to speak, this was again driven by the international visitors, but people who are relocating their companies to Armenia. This was a big increase. I'll give you a couple of numbers so you understand the scale of the things, and then I'll give you our estimate of how much it contributed to the potential growth of the Armenian economy. So if you looked at the non-resident registered employees in Armenia before the February of 2022, it was around 5,000 people. As of December of 2022, it was 15,000 people. So it's 200% increase. Furthermore, if you look at the composition of these flows and newly registered non-resident employees, you'll see that they're mostly in the IT sector, and their average wage is 4 times higher than the average wage in Armenia, which is basically telling us that these are high-skilled people who are relocating to Armenia. Secondly, if you look at the number of non-residents opening companies in Armenia since February of 2022, that number has also skyrocketed. And since April, we basically have around 400 companies monthly. And it's a big number for Armenia, registering again, mostly in the IT related sectors. So this is the part which we think will have a more of a permanent increase on our productivity. And we as a central bank are, of course, very conservative. But our estimates tell us that, if in terms of the level effects, we'll have at least 1 to 2 percentage point contribution to our potential growth for the next couple of years, stemming from this particular point. Of course, if you look at the reverse side of this, inflation and demand is key, because it is obvious that Armenia and for the matter of fact, any country in the world cannot increase its potential 2 times in a year. So lots of it is actually generating a positive output gap stemming from external demand. And that is why if you look at the inflation picture in Armenia, it has peaked already. And last month, it actually posted 3.2%, which is below our 4% target. So we are doing quite well on the inflation front. But if you disaggregate and look at the underlying forces which are driving the inflation, you'll see that some sticky parts of the inflation, services part, are still high with respect to the target. So we see a month-on-month or quarter-on-quarter basis some deceleration. But the point is that, as Subir, I think, in his policy recommendations was mentioning very correctly, we have to be very careful in terms of declaring victory. And we have to understand what are the underlying factors, because if this demand continues, we have to be sure that we contain this with a credible monetary policy. I think this is the approach that we have been taking since 2020, because we increased the rates first time in December of 2020 when our inflation was below the target, because we were seeing that inflation is coming. That is something which actually allowed us to have a very high growth, 12.6%, but at the same time, quite low inflation. So we didn't have to give up any price stability to get that growth. I think this is one in terms of the risks and policy implications. So we didn't increase our interest rates for last couple of rounds. But we again signal to the market that we are going to look at the both scenarios. From financial stability point of view, the main risk is, of course, if there is a reversal of some of these flows, what's going to happen? And for that, again, we have been forward-looking. So we increased our counter-cyclical capital buffers by 1.5 percentage points during last year. Again, what is a better time to prepare for future shocks? Because the banking system profits have, of course, skyrocketed given the international flows. And so we made sure that at least 30 or 40% of the profits generated in 2022 are actually going into the capital. The second financial stability risk, which is key for us, is the overheating in the real estate market, because there was a huge demand both in the rental market, but also for the secondary market in the real estate. There we saw a very market increase in the prices and rents. And so we have imposed an LTV ratios to tame some of the risks. But this is something which worries us. And we communicate with the market that we are following this very carefully. To sum up, I completely agree with the Rio and the Subir's emphasis on basically risks and a very high uncertainty around any baseline. That is why in the way we do it, we basically try to make sure that we consider very carefully both types of scenarios, both inflationary scenarios, which are related to continued demand growth, but also, possibility of having more deflationary scenarios if, things go wrong, both internationally, if the financial crisis, it turns out to be a financial crisis in a systemic nature. So we monitor both of the risks. At this stage, we didn't increase the rates last time, and we didn't decrease it. We let it unchanged and monitor to make sure that the underlying inflation forces and the output gap are reflecting our potential of the economy. I will stop here. Thanks very much.
Thank you very much, Mr. Armen Nurbekan. So now we are 1 year into the war in Ukraine, and we can see the new regional landscape is forming in the region of Caucasus and Central Asia. Mr. Johannes Lin, How has the introduction of sanctions on Russia, supply chain disruptions and movement of migrants affected regional trade first? And secondly, relations with neighboring countries such as Turkey and China, and what geo-economic movements do you foresee in the nearest perspective in the region?
Thank you very much, Ainur. Can you hear me?
Yes, we can hear you well.
Great, wonderful. So thanks again for inviting me. The organizers have been very kind to let me join you remotely. I'm very sorry I can't be there in person, but this will have to do. So I want to congratulate you, Subir, and your colleagues at the IMF once again for a tremendously interesting and enlightening report. And I'm particularly pleased that this time you actually separate out CCA from MENA, because that, I think many of us who are geographically focused in our work, I think, have an easier time reading this report if we can focus on the region, sub-region that we're particularly interested in. So I hope you will keep this up. And of course, I think for your audience in particular sub-regions, that's also helpful. So well done. And I loved your presentation. It's very informative. Thank you. Now, I was asked, Ainur asked me basically to focus on trade, migration, and capital flows and related issues. So let me start by looking back. As we saw already with the numbers that were cited by Subir, there's great variation across countries. The details that I now share with you are based on actually ADB, Asian Development Bank data that were recently produced, including at the very recent annual meetings in South Korea. So let me give you some specifics. One of the factors explaining the increase in trade during last year, which of course, was a factor also explaining the increased growth performance, improved growth performance that we just heard about, was due in part to higher energy prices, which that trade translated to higher trade values for energy, both on the import and export side. We, of course, as we already heard from a couple of the speakers, is a significant increase in re-exports to Russia, particularly in Kyrgyz Republic and Kazakhstan, Uzbekistan. In Kyrgyz Republic, actually, the exports to Russia increased by 150% last year, quite extraordinary. Tourism, as we heard, for Armenia, but also very importantly in Georgia, fortunately picked up again. The inflow of Russian citizens to Armenia, Kyrgyzstan, Kazakhstan, Uzbekistan were a major factor, both in terms of employment, generation of new registration of new enterprises, as we heard from Armin, and of course also in capital flows, particular deposits, as we heard, but also other aspects of capital. The migration, the reverse migration, if you wish, from the Central Asian countries in particular to Russia, to everybody's surprise, I think, as was mentioned by Subir, did not decline. If anything, remittances increased. So remarkable stability. But it's worth noting that there appears to be a decline in long-term migration to Russia, which is probably linked to the fear of young men who might be long-term migrants getting caught in the war in Ukraine and being mobilized for the war in Ukraine. Transport service trade increased, service trade more generally, but particularly for transport linked to the trade and linked to the people movement that we seen. And finally, it's worth noting that foreign direct investment, partly because of the post-COVID recovery and opening up again in the region, increased, but of course also the link to the Russian migration, if you wish, the Russian people movement that I've already mentioned, and business movement also linked importantly to foreign direct investment. So those are some of the factors looking back. Now looking forward, the outlook, as stressed by everybody already, is highly uncertain. Many of the factors, as we heard, are likely to be temporary, whether it's energy prices, whether it's Russian migration, whether it's the movement of companies. Some of these can easily reverse should the situation, particularly in Russia, improve. The Russian economy, indeed, is improving and recovering somewhat, although still overall quite stagnant. What is noteworthy, and I'm not sure we've really explored sufficiently, is the Russian economy is increasingly developing itself in terms of its war footing. And that changes the economic structure, it changes consumption patterns, and I don't think anybody's yet analyzed what that means for trade and specifically what it means for the economies of the CCA region is worth further pursuing, I think. The fact that China's economic outlook is on the rebound, I think clearly will help Central Asia and to some extent, lesser extent, probably the South Caucasus. What is unclear at the moment is whether or not investment, especially under BRI, the Belt and Road Initiative, will pick up again. There was a considerable slump after 2019, partly because of COVID, largely perhaps because of COVID, but also because of changes in actually the policy stance of the Chinese authorities regarding Belt and Road Initiative and the scale of investments that had taken place earlier. So it's not likely, I think, it's fair to say, that the BRI investments will rebound to the level that in Central Asia in particular that they have had before. Transit is an interesting challenge, an interesting question. Transit trade from China, especially to Western Europe, had picked up tremendously by rail in particular through the northern corridor over the last few years before COVID. It actually reinforced by COVID because ocean trade was significantly impaired, but it was hit severely. The northern corridor transit trade was hit severely, of course, by the sanctions regime and in fact by closure of the transit from Russia through Belarus to Western Europe. So that opens up opportunities, and actually I'll turn to that in a minute for the future or later on in the conversation. But for now, that transit trade, which by the way has for Kazakhstan in particular, but also for Russia and the other transit countries, could generate considerable revenues. This transit trade will likely to be more limited in the foreseeable future. Finally, in terms of risks, I think we should stress, perhaps more so than some of us already have in this conversation, the risks in the global economic outlook. Sitting here in Washington, as I do in the Washington metropolitan area, the US budget potential impasse and its impact could be severe. Whether or not the CCA region would be directly and how much it would be affected is subject to debate, I suspect, but it could affect the global economy and financial stability in the world significantly. And finally, of course, there are geopolitical uncertainties and risks, especially because of the increasing confrontational stance between China and the US, and to some extent the West more generally, which, you never quite know how that's going to go. And so there are significant downside risks. So my last point here, and then I'm closed, Ainur, is, if you look at the projections that we've seen for 2022, the good news, of course, was that they were much underestimating the positive impacts, surprising positive impacts that the situation, particularly in Ukraine and in Russia, had on the Central Asia region. Indeed, if you have the average growth rate 2% and more percentage points higher than expected, that shows that our projection models really are not very good and reliable when the underlying structural conditions are uncertain and subject to major change. And so I think we have to be ready in terms of looking at current projections for 2023 and especially for 2024. We have to be ready and be ready for any potential significant downturn that we are not at this point projecting. And that in turn means that the advice of the IMF and also others that we've heard on the panels, that buffers are terribly important to protect against potential downturns, really have to be very seriously considered. And I'm delighted to see that, as we heard from Armin, to some extent also, perhaps less so for Kazakhstan, that buffers are being built during periods of unexpected, especially unexpected positive economic situation. Thank you very much.
Thank you very much, Mr. Johannes Lin. Yes, you're absolutely right. We should be ready for potential downturns in the future. Previously, Mr. Sabirlal, you already mentioned in our speakers, panelists as well, that CCA countries continue to face and will continue to face this year a high degree of uncertainty on the economic front. Can you elaborate on how uncertainty shapes the policy challenges CCA countries face, and in this context, what are the key policy priorities for these countries?
Thank you, Ainur. That's indeed a very relevant question to ask at this time, as also my good friend Johannes mentioned, and others have also highlighted, including both the deputy governors. I mean, the uncertainty at this point means you have to have rebuild buffers. Remember that after COVID, many of the buffers were depleted in many countries, for instance, foreign exchange and fiscal buffers. We have had some luck, as was in the presentation earlier, that the public debt got a bit of a boost because nominal GDP was high, but the job is not finished, obviously. And Armin, I think, said it quite eloquently by saying it's too early to declare victory, which means monetary policy makers also need to be vigilant and to develop, have the space to react if a negative shock were to materialize. The challenge, of course, is that when there's a wide range of uncertainty, things can get maybe even better than in the forecast, but they could also get a whole lot worse. And so the conservative thing to do is to have in place in terms of the monetary policy stance and the fiscal policy stance, enough room to be able to cushion if another shock were to materialize. Because remember, for this region, in essentially 2 short years, we had 2 very large shocks, COVID and then the war in Ukraine. So that's on the short term, on the fiscal and monetary policy side. And then the longer term challenge, this should not distract from the longer term challenge of the region, which is, in most countries, there's a large footprint of the state in the economy. But at the same time, countries have growing populations, and the process of convergence to peer countries outside the region is not really happening. And to get that convergence in incomes, one needs higher growth, and that can only come from the private sector. So structural reforms, governance reforms, SOE and financial sector reforms, human capital, trade. These are all important priorities that we shouldn't lose sight of because we are focused very much on the short term, because they're still important. Thank you.
Thank you very much. Let us stop a little bit and talk a little bit more in details about the fiscal policy and role of fiscal policy in inflationary environment. I have a question to Armen Nurbekyan. How can policymakers mitigate the impact of higher policy rates on borrowing costs?
Thanks very much. It's a bit of a tough question and tricky question, right? Because in some sense, the whole point of increasing the rates is to increase the borrowing cost because you see a problem with demand. So it's a tricky question. But let me go back to the fiscal policy, because I think the context is that what is the role of fiscal policy more broadly and monetary policy, in this environment, right? Because fiscal and monetary policy coordination is always important at any point of time. But I think in the current circumstances, it is even more so because we have a very big increase in flows, which creates lots of demand. And given this is an external demand, this is not driven by a strong domestic credit or borrowing, as you have in your question. So the key shock absorber is really the exchange rate, because you have to somehow equilibrate your external demand and the domestic prices. Now, that raises, of course, big movements in the exchange rates and big positive output gaps. So the question is, how can fiscal policy help in this environment? And I think it's absolutely key that fiscal policy, at least, doesn't exacerbate this positive demand. So, and I think this was again mentioned in the presentation that Subir presented. I think fiscal policy has an absolute key role here in terms of making sure that they don't pour even more oil on the fire. And in case of Armenia, I think our fiscal policy have been quite prudent in that sense. I think that will also help, answer your question, because once you have this counter-cyclical fiscal policy, what it also imply is that your debt to GDP levels will be in more sustainable levels, which will have a good effect or a positive effect on your risk premium of the country and will reduce the borrowing costs systemically in the country. Quite frankly, I'm actually much more worried in terms of the borrowing costs and fiscal sustainability around the world than in the CCA region. And I think these events that we have been following, they may have much bigger effect on international investors' risk aversion, and that is much bigger risk for the countries in the region, particularly in Armenia. I think this is something which worries me a lot. I'll stop here.
Thank you very much, Mr. Armen Urbican. Countries have responded strongly to inflation. We mentioned it and we talked about it earlier by raising policy rates substantially. That was the case for Kazakhstan as well. So, Mr. Akaljan Baymagambetov, how do you see transmission of these rate hikes over the past year, and what steps can central banks take to enhance the effectiveness of monetary policy?
Thank you for the question. I know it's really a wonderful question. It's always debate, for example, in Kazakhstan particularly, about the effectiveness of monetary policy, transmission mechanism, etc. We see the pros and cons on that area. What is the good things? We see that very good work of the policy rate hiking on a, for example, FX channel. We see that we experience a high volatility when war started, and it was some part of that more on expectation side, and it was a quite rational expectation from the economic agent. They tried to create some buffers in foreign currency, etc. And we see some volatility on that time, and when FX rate was increasing up to more than 500 Tenge for $1 US. But we also see that we start hiking a lot at that time and make some big step to prevent deterioration in inflation and on the fixed rate side, and start to create some more attractiveness on the Tenge assets, and to prevent some huge effect on inflation side. And we see that after that, in May, maybe last year, we see some good strengthening, and Tenge, and last part of the year it was around 460, and now we see that 450 maybe it's strengthening now, and we see that high rate is quite good working on the FX side channel. What about the we also see good transmission on deposit market. We see that deposit rates increased, and it's also give some more saving mood on demand side, and it's create some incentives to the population not to spend a lot, maybe right. to save a part of the money, and not to bring it to the market, and which is hit the inflation more. And the same story on the loan, but now we see some part of weaken maybe side of the transmission mechanism, and I also in that particularly agree with policy recommendation priorities, which is Sabir already mentioned about the creating buffers, and for example in the fiscal buffers. We see a lot of subsidized lending in Kazakhstan, and it's really creates some weakened part of our transmission mechanism. We see that some sectors of economy subsidized a lot by different government programs, and it's creates some perception on unfair market rates for different economic agent, and it's really reduced the effectiveness of the transmission mechanism. Other part, maybe it's quite common for the region. It's a very high level of dollarization, which create some problem for the effectiveness of monetary policy. Now we see, due to high rate, that dollarization level in Kazakhstan, it's really decreasing, and we see maybe the local peak of dollarization of deposits in Kazakhstan during the February or March last year, after the war started between Russia and Ukraine, and at that time it was very close to 40% maybe. Now, about the very actual recent data show us that deposit dollarization in Kazakhstan, it's a little bit less than 30%, which is, we see that base rate working on that side, and it's creates some saving mood for population, and maybe not bringing a lot of money to the market, to the consumption. Yeah, and we try to collect different obstacles for the effective monetary policy, and we written it in our strategy for monetary policy, and we see in most of them may be quite common for the region. Some of them is very specific for Kazakhstan. It's fiscal dominance, and I completely agree with IMF view on that, now it's more time about the thinking how to rebuild again the fiscal buffers, and what we are working with the government. It's try to return to the counter-cyclical budget rule. We know that the recent revise of Republican budget was government not follow the fiscal rule due to several reasons, but what we are working now with the government, try to return to this path, and to be more counter-cyclical on the fiscal side. Yeah, another work which quite successful with the government, it's working on building yield curve, or deepening the government securities market, and we try to create more credible, more resilient yield curve, which will be like a starting point for a market perception about the fair price, fair rates for long-term loans, and when we fight with the inflation, and we will decrease the actual number for inflation, it's also creates some more confidence with long-term financing, and from the market, not subsidized by the government, and it will create more incentives for market-driven loans, etc. Maybe about more on that side. Now I will stop.
Thank you very much, Mr. Akiljan Baymagambetov, for very informative answer. I will go now, and I have a final question to Mr. Johannes Lin, and then I will give a floor to our both online and offline audiences with their questions to our panelists. So now, taking into account all risks and uncertainties that we have, including risks of potential new sanctions, how do you think, how should CCA countries approach trade policy?
Thank you, Anwar, and once again, it's just wonderful to be part of this outstanding panel, and I'm learning so much from my co-panelists. Thank you. But on trade policy, you know, we have a sort of tendency when we think about trade policy to think perhaps about tariffs, quotas, trade agreements and so on. I would submit that perhaps those are less important issues at this point. Although it's important, particularly during crises, to remember that putting on export control is sometimes done during food crises, on food exports or on imports in order to control foreign exchange reserves and so on, protect foreign exchange reserves, is not a good idea. So let's remember that restrictive trade policies are not a good response to crisis situations, at least not in general, and so should be resisted. But I want to focus more on actually a broader set of issues relating to trade, investment, and so on. And this is really that this is the moment to reinforce a focus on improving regional connectivity in its various dimensions in Central Asia and in the Caucasus region, basically designed to create a regionally integrated economy, and of course linking also wherever possible, where they're not hopefully temporary obstacles, as in the case of Russia, linked to the rest of the world. So let me identify 4 or 5 main issues that I think deserve more attention, especially now. They're not new issues. We've argued about this. Those of us who've looked at regional connectivity and economic integration for the region, these are issues that have been around. But now I think is the time to act. Its transport infrastructure, remains an issue because there remain important bottlenecks, but also much more focus needs to be put on operation maintenance, which I believe has been neglected in the region for transport infrastructure in particular, as of course is true in the rest of the world. What is new is now that there is a case to be made for more investment in the middle corridor, which is connecting China with Europe through Central Asia, across the Caspian Sea, the Caucasus, and then across in one way or another, the Black Sea or the Mediterranean to Western Europe. Here, there are investments needed in improved rail infrastructure. There's been already some movement to move forward with a new rail connection from China through Kyrgyzstan, Uzbekistan. That would be helpful, but it is a long-term proposition. The ports in the Black Sea and the Caspian are in part underdeveloped or congested already, and need to be upgraded if the middle corridor is to develop. It is, of course, particularly important for Central Asia. Kazakhstan, of course, is part of the northern corridor, but the other Central Asian countries are very much part of the middle corridor, and then the Caucasus, of course, countries also. So an important challenge, but also an important opportunity how to upgrade that trade corridor. The second issue, however, and it's true especially for the middle corridor, is that the borders in Central Asia and the Caucasus remain thick, as it's the trade and economists call it. The borders are a real barrier for trade and transit. And this is especially, as I mentioned, a problem for the middle corridor because you have particularly large number of borders that have to be crossed. So we need to have much less burdensome and much more predictable border crossing processes, procedures, and rules. And of course here, and I'll come back to that later, digital solutions can be very helpful. The third area is behind the border conditions remain problematic. Logistics, the logistics conditions in Central Asia in particular are among the worst in the world. And the investment climate, similarly, all indicators are that the investment climate, many of the South Caucasus, in the CCA region, particularly in Central Asia, remain very problematic. Now here, by the way, in terms of investment, there may be an opportunity for the CCA countries to pick up on investments in certain areas, in the industrial areas, such as car manufacturing, servicing the Russian market, where the Russian production facilities have been hit by sanctions. To what extent this could lead to secondary sanctions is, of course, something that would have to be watched. But there are maybe opportunities here that have been created by the sanctions regime on Russia. I mentioned, this is the fourth point, digital connectivity. It's critical for efficient goods trade, transit, and especially also, of course, for trade and services. And finally, the final point I'd like to remind us all is political stability and peace is absolutely critical. And here one can only hope and pray for peace between Armenia and Azerbaijan, and of course also for peace in Central Asia, where there have been border skirmishes between Kyrgyz Republic and Tajikistan. Peace and political stability are essential if this regional connectivity and with it trade, investment, and growth are to be sustained in the future. So coming back to my main point, this is, I believe, the time where increasing regional connectivity, integrated economy in the regions is absolutely a priority. And I think the potential for doing so is increased, not least because we actually now have a better set of relationships, especially in Central Asia, among the leaderships than we've had in a long time. And so that, of course, goes back to the political changes that happened over the last 5-6 years in Uzbekistan. And I think this is the time to capitalize on the improved political, on the one hand, improved political opportunities here, but on the other hand, also in responding to the opportunities which crises create. Thank you.
Thank you very much, Johannes Lehn, for very important incentives on economic trends that we are witnessing here in this region. Now, let me move forward to the Q&A session from our audience here. I see the hands. Thank you very much. Just before I receive questions from the audience here in Astana, may I sound a question which was received by the online audiences, and probably that would be addressed to Mr. Subir Lal. How should monetary policy react to the demand supported by non-residents, in your opinion? That was a question from our online viewers.
Thank you. I assume that means because monetary non-residents boosting domestic demand in the countries where they have moved to. In some sense, the policy recommendation remains the same, that the objective of monetary policy, when it is to contain inflation, will have to be to restrain aggregate demand regardless of the source where it comes from. So tight monetary policy, high interest rates, and in some cases perhaps also some consideration for macroprudential policies in case there are particular pockets of high demand such as housing and other things fueled by credit growth. The one wrinkle to that broad answer is that a judgment will have to be made whether the source of this excess demand is temporary or permanent, or at least longer term. Because if it is temporary, then one could make a case that monetary policy could see through the first wave and let it be, as long as it does not get entrenched in expectations. But if it's more likely that this is a longer term phenomenon, then monetary policy would obviously have to be worried about the inflation expectations channel and react accordingly. At least that would be my response, but perhaps
yes, if you
central
have also
bankers
something to
may
add.
know
Yes.
more.
Yeah, I agree with Mr. Subir that I say that in case of we judge it's a temporary, we also should think about the secondary effects. Yeah, like an inflation expectation, it can be heated, and after that this temporary effect can be more persistent, and it creates some problem for monetary policy. That's why I agree we should think about the source of demand, but we should operate more on aggregate demand and evaluate how it impact on the prices, how it affect on inflation. In case of it's temporary and we don't see any secondary effect, okay, it can be looked through the this spike. But in case if it's create more big problem, or it's maybe not temporary but medium long-term effect and secondary effect, we also should evaluate it. That's why maybe the short answer we should think about more aggregate demand than a source of the demand. Yeah.
Thank you very much. And now let me ask whether someone from the audience here in Astana has questions to our speakers. Please raise your hand, introduce yourself, and go ahead, please. Yes.
Hello, everybody. Thank you for this opportunity. I'm Nutsa Shubashvili from Georgia. I represent TV channel Formula, TV program Business Formula. Thank you for this opportunity, and thank you for your very interesting outlook, presentation, and discussion. So my question is regarding increasing transit trade in the region and also in Georgia. We know that right now some economic growth in Georgia is mainly driven by financial inflows that are triggered from Russia and ongoing war in Ukraine, including transit trade. And there are many evidences and signs, even EBRD included, this topic in their latest outlook and issue that Russia is using our region, I mean CCA region, including maybe Georgia and other countries, maybe also Kazakhstan, in order to avoid the international sanctions. My question is to Mr. Subir. What kind of risks do you see about regarding this topic? Because also we know that there are ongoing talks that EU and US are preparing another package of sanctions that might be and maybe include also transit trade restrictions, and maybe this will affect somehow our economy in Georgia and also in the region. So please specify about Georgia's economy and also in the region, what kind of risks and challenges do you see regarding this increasing transit trade? Because as I mentioned already, and many international organizations are saying that Russia is using our region for avoiding the international sanctions, import, parallel exporting, and transit trade, as I already mentioned. Thank you very much.
Thank you very much. There is a lot to unpack in your question. And so let me step back for a second to first talk about the sources of growth in Georgia. I think we have to look at all the factors that are responsible for the very high rate of growth in Georgia. It is not just transit trade, clearly. I mean, tourism has picked up in Georgia. If you look at the domestic labor market and wage growth, that's strong, suggesting domestic demand is also strong. Certainly there's been inward migration as well, and as Armin mentioned about Armenia, similarly here also about setting up new businesses and so on. So there are several channels at work that have boosted growth in Georgia, and clearly there was already momentum after the recovery from COVID. And so that's on the overall picture. Now, in terms of the increased transit trade, it is also important to be clear that, yes, to some extent, it is a reaction to the sanctions on Russia. But transit trade by itself, I mean, it is partly a natural outcome, and that doesn't necessarily mean it is violating sanctions in some sense. So one has to be careful in not drawing blanket conclusions from the data, and especially because this data is very fresh, it gets revised, and we have to, and errors and omissions, those are the kinds of items that economists love to fuss about, which show up. Governments in the region, and including in Georgia, have been very careful to work to make sure, as best as they can, that they are not running afoul of any sanctions, and that they are in compliance with the sanctions regime. Now, so there is, of course, one has to look again, and it's an ongoing thing. It's like capital controls, that there new channels emerge and they are followed dynamically and adjusted and so on. and it seems to me, not just Georgia, but the region in general, is being very careful to stay, in line with the spirit and the letter of the sanctions in place against Russia. So, in sum, it would mean growth has multiple drivers in Georgia, and B, that policymakers are mindful both on the financial side and on the trade side to ensure that their countries are not being used as a conduit to avoid sanctions. But it's not a process that just begins and ends. It's an ongoing effort that needs to be maintained. And the longer sanctions are in place, that means the efforts need to be continued and refined. Thank you.
Thank you. Any other questions? Please go ahead.
I'm Maria Minada, still from Georgia. Nice to be here. So I'd love to ask you a short question about the country's economy that is dependent on the region's countries. I'd love to know about the economic growth projections, including the revision and of course the inflationary processes. You also said that migration inflows might ease. Is it a base effect, or you have another expectations? And also when we have internal demand still high at still high levels, we might also see some deflationary process, and Armenia also is trying to avoid deflationary processes. Thank you.
Yes, you can go first if you.
No, I was just.
If you're ready to answer.
No,
yes.
Well, I think we're all ready to answer. Thank you for the question. I think. So what we present, what we discussed was clearly our baseline view, and then the risks around it, which are tilted to the downside. There is great uncertainty. You asked about the questions, for instance, on migration, and we could broaden that to also think about remittances, or even movements of people's wealth, say, from out of Russia into some of the countries. The baseline does not assume that there will be a reversal, more a tapering, because last year was an extraordinary year for these factors, and clearly that cannot be sustained, and we are seeing some evidence of that already in the early part of this year. So it's still early days, but it looks like that's how it's shaping out, which is a moderation rather than a collapse, or B, a reversal. But that is a risk. So one has to always be prepared for that, because I think as an economist you learn to be very humble about your forecasts, because factors can change, shocks can emerge. Deflation is also not in the baseline for any of the countries, but clearly I'm sure the central bankers should speak on that. They have to be. They are always cautious about both upside and downside risk, because their mandate is very clearly defined. So that's why. But that doesn't mean that it is. At least we don't think it is imminent or anything of that sort. We're still in a high inflation to normalization era. So that's more of a very low tail risk kind of scenario. Thank you.
Thank you very much. Yes, please go ahead.
Thank you for your presentation, Mr. Lal. I have a question to you. Have a look on your projection, forecast of inflation, average inflation, to 2022, 2023, 2024. So you moderate, revised inflation in April World Economic Outlook. What is the factor of your revising? First question. Second was both speaker, and to Mr. Baymagambetov and to Mr. Lal. It's not in news actually. We have, Russia has a big fiscal deficit. What is the main outcomes for Kazakhstan, especially for net oil producer, exporters, especially Kazakhstan? This is outcomes of big fiscal deficit of Russian Federation. It's inflation, devaluation of ruble, maybe, I don't know, maybe some buffers, and et cetera, et cetera. So it's like, maybe you have some stress scenario of this, IMF and National Bank. Thank you.
Thank you. please. Who would be first, Mr.
Well,
Val? Yeah.
actually, could you clarify your second question? I didn't quite get what the question was.
Maybe some scenario of this is, I know, actually, probably it will be maybe a big shock for CIS country. Of course, it's like Russian economy is like big magnet for CIS countries, for especially CAA countries. So, I mean, some touch it, some business discussion, several speakers, I mean, the trade policy. So, I mean, Russia Federation has now deficit, fiscal deficit, big fiscal deficit. So, probably they have maybe several options of that. I mean, what is the next, I mean, some scenarios, worst scenarios of this is big fiscal deficit, I mean, outcomes for our economies, I mean. It's like a shock of point. You understand?
Well, a little bit, but maybe not fully. But I'll take a stab at it anyway. And
I mean, maybe probably it's more particular for Kazakhstan. Maybe this is because of
let's see.
Trade, bilateral trade with Russia.
Yeah, we'll take a shot at it.
Okay.
And see if you,
Thank you.
are happy. Why don't you go first?
I will try to answer to this question. Yeah, I agree that Russia it's a very big factor. Our relationship with Russia, trade relationship, and others, and we see the big fiscal deficit in Russia, and it can be through outcomes from that. Maybe it's not fair to discuss the different central bank job, but we see quite a professional team in Central Bank of Russia, and I believe they doing the job greatly. But yeah, I agree that big fiscal deficit it's creating some pro-inflationary risk for Russia, and due to the big share of Russia in our import, and due to the natural connectivity between two countries, it's also creates some pro-inflationary risk for us. It's one big picture, which is very fair for many years. We see from other side, we see some decoupling of Tenge from the Russian ruble. We provide a very flexible FX policy on that. We don't intervene, and we maintain both side volatility on Tenge, and we see some more balanced FX market now. It's one side which creates some decoupling between FX rates in Russia and Kazakhstan. But yeah, in case of very huge drop in FX rate in Russia, I believe it creates some impact to Kazakhstan. It's definitely, it's one point of view. Another point of view, we see some shrinking of share of Russia in our import. For example, for last year, for 2021, the share of Russian import in whole import in Kazakhstan, it was about 42, maybe 43%. For last year, 2022, we already see that the share of Russian import was about 35%. It's shrinking, and we see that, for example, in case of, we seen it's on a quarter by quarter base. For fourth quarter of last year, it was about 30%, and first quarter of this year, the share of Russian import shrinking a little bit again. It's 27% now. That's why it's also creates some natural decoupling of two economies from one side. From other side, any case, very big borderline. It's the biggest borderline in the world, or maybe second biggest borderline in the world. That's why it's a lot of different connectivities. Yeah, my conclusion may be that I believe that the impact of Russian economy to Kazakhstan, it's decreasing, but not so huge. We, any case, we are neighbors. We are big neighbors. We have a big borderline, and the share of Russian import, for example, in our food, it's Russia created half of food import to Kazakhstan. It's in any case reasonable to monitor the situation in Russia and make some adverse scenario, maybe not baseline, but it's a work which doing by central bank on a daily basis. Yeah.
Thank you very much, Mr. Subirlal. Yes.
Thank you. Very briefly on your first question on inflation. So the way I would break it down is, why did we revise down our inflation forecast? So inflation, as you know, is affected by both external factors, the imported inflation component and the domestic part. And we saw both of these pointing towards lower inflation going forward. On the imported part, global commodity and fuel prices have eased, so certainly that's important for many of the countries in the region. And exchange rates recovered and appreciated somewhat, so it was a helpful effect on inflation going forward, including in Kazakhstan. Of course, we expect that to happen. And some of the supply issues that had arisen also eased. Now, on the domestic part, maybe a couple of things to mention is that because of the fairly, timely and in some cases aggressive monetary policy tightening that is bound to feed through with the lag, as always happens, to domestic demand. And in addition, some domestic supply considerations in most cases have also eased. And just maybe 2 points on the external side again, where we are seeing an easing of remittances and of transfers. So all these factors together are all pointing in the same direction, both on the external imported inflation component and the domestically generated inflation component. So it gives us some confidence that inflation in the baseline would come down. Now, does this mean that the job is finished? By no means, and that's why central bankers are and should be vigilant. But certainly in the baseline, it's all pointing in the right direction, where we feel, if you look at the case of Armenia and the case of Georgia, inflation has actually come down quite sharply already, although the point is well taken that we should focus on core inflation and not just some of the headline numbers. But nonetheless, it's coming down. And in other cases, it has already either peaked or certainly plateaued. So that's the basis for our revisions. Thank you.
Thank you very much. We keep receiving questions from our online audience, maybe one more. This is addressing to Mr. Lal. Why terminal and natural rate is estimated higher for Kazakhstan in models of IMF in comparison with other countries? That was the question. If you can go very shortly, because we are running out of time.
Well, I'll give you a very short answer, because that's what comes out of the model. Thank you.
Yeah, thank you very much. Yes. So if we have any other questions, maybe just one, because we are running out of the time, please go ahead.
Hello, my name is Arseniy Molchanov, RTVI channel. Kazakhstan became a huge place for parallel import for Russia. And how do you see risk for Kazakhstan economy and Central Asia economies if Europe starts to impose secondary sanctions?
Please.
Okay, I try to answer. First of all, what we try to avoid to be an instrument to avoiding the European or American sanction against Russia. When we talk about the import, we should differentiate the content items, and I completely agree with Mr. Subir, who said that we no need to see just the numbers, because it's not give you a clear picture. When we, for example, see numbers, our numbers to the export to the Russia, we see that, for example, in nominal term, it's not growing for last year and compared with 2021. Maybe some structure is changed. We see some drawdown in some raw materials, like in ferroalloys, etc., which is definitely driven by the avoiding sanction, because the former counterparts of our metal industry, it's in a sanction list. That's why they don't trade now, because they Europe-listed companies, and they try to avoid to be sanctioned, but in a secondary to be avoid to be in a sanction list. We also create some our financial market agency create some compliance procedure for the banks, and banks itself try to avoid to be in a part of instrument to avoiding sanction. And when we see some growing part in some kind of finished goods or ready-to-use goods, but it come to Kazakhstan from not sanctioned countries like China and other countries. That's why it's not some sanctioned items. We try to prevent it, and I see that government closely work on that, and they create some commission which you working and trying to avoid some dual purpose goods exported from Kazakhstan territory to the Russian Federation. And when we discuss about the outcomes, I believe that secondary sanction to any country of the region is creating a big issue and big problem for the economic growth, because in that case it will be maybe the same situation that import of machinery, investment import, etc. Will be banned, and it's create a big problem for the economic growth, for the government policy. That's why, in terms of Kazakhstan, I believe our government doing really great job on that area, because it's quite sensitive issue. We are naturally trying to be neutral to the world and to the Russia, our biggest trading partner. Like in a single country, it's the biggest trading partner of the Kazakhstan. That's why they try to be balanced on that, because sanctions it creates some problems for us also. It creates some harms on economic activity. That's why we're trying to be moderate on that path, and avoiding to be instrument in that area. Yeah.
Thank you very much indeed, dear panelists, for your time, for presenting regional economic outlook to us and answering our questions. I also thank the audience here for joining the IMF's Middle East and Central Asia Regional Economic Outlook Seminar. We look forward to seeing you again. That's it for today. See you later. Thank you.
Thank you.
Thank you very much. Have a good day.
Thank you all. Bye-bye.